Good afternoon, this is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market commentary for the week ending June 20th. Last day of spring, first day of summer tomorrow. Sunshine will be welcome in many parts of the Midwest over the next week if we get that opportunity. For the week, July corn up 6 cents. December corn was up about 4 cents. Most of that was late in the week, somewhat due to the wetter conditions maybe in 15-20% of the Corn Belt, northern Iowa, Wisconsin, Minnesota, parts of South Dakota. On the soybeans, though, interestingly enough, seen some change on that old crop, new crop dynamic for the first time in a while, with July beans down 10 cents for the week. At the same point, November new crop soybeans up a dime for the week, actually closing at the highest level in the month of June, surprisingly enough, considering crop conditions and everything else that's going on. As time wears on, and as we approach pollination here next month, yield reports or yield thoughts are going to become more prevalent in the market's thought process. Trend plus yields right now are the mojo of the corn. Assuming we don't see extra rain, that's probably the direction this will go, because right now there's not any areas in the Midwest of any size that has any dry conditions. So that'll bear watching. So weather conditions, obviously, the next 3 weeks will be the norm as we approach. But it's going to be a while before we can talk about heat, or before we can talk about dryness at all. Movement continues to be fairly limited, both in old crop and new crop. New crop sales have been extremely slow. In fact, in some parts of the Midwest, have failed to see very little, if any, new crop movement from the producer in the last 30 days. Old crop continues to be slow also. At that same point, you have differentials with basis around the Midwest. Hottest basis still seems to be East Central Iowa. Cedar Rapids, Clinton markets tend to be the barometer right now, but keep in mind on corn especially, there's still really good demand at the Gulf. Big export program we're trying to fill the balance of the summer. Funds, we have seen the funds lighten up on some of their length in the last few weeks. Actually, as went short in the wheat, the length in the corn and beans have been diminished. Apologize, don't have Friday's update yet for the end of the week as far as commitment to traders, but that may show more momentum to the funds having less of a position. Again, the old crop, new crop spreads in the beans were interesting as you're starting to see some of the premium of that old crop diminish. Now, late in the day, Friday today, meal rallied $20 almost on the close. It sounds like some option locals got caught short with a gamma play, and they had to cover 3,000 to 4,000 contracts of futures to offset those. One guy said he hasn't seen that much action in the meal pit in years, and some of that was done in the after hours. Cattle, switching over to livestock, cattle on feed report this afternoon, on feed at 98%, pretty much in line with what the trade was looking for. Placements at 93, also in line, and marketing's in line also around 96%. So the cattle and feed report, as a general rule, looks neutral. A lot of capitulation in the cattle market this week. For the week, cattle was basically unchanged in the August lead month futures. At the same point, we've had tremendous volatility. Feeders were limit higher. Limit down Wednesday, limit higher Thursday. When the cash trade came out Thursday and the cattle at $150, the cattle market made a major move back to the upside after a huge downward reaction on Wednesday. So the up and down of that cattle market continues to be key. Cash is the leader, and whenever cash is above futures, whether you're talking cattle or corn or what, that is a key indicator to keep some premium in those futures. All in all, fairly quiet week. When you look at the big picture, I was looking at a chart of November soybeans this afternoon, and this is from a trading range on beans. We're at about 30 cents so far for the month of June. That is by far different than some of the years we've seen in the last handful of years. I think in 2008 and 2012, the trading range in November beans for the month of June was nearly $4. This year we're talking 30 cents. Now, does that change? We'll see. Key things to look down the road: the March 30th crop report, stocks planting report is a week from Monday and the 30th. That's probably the next major game changer you can see in the grain markets. That, along with some new changes into the weather forecast as you look longer term. Right now, that's probably not a huge issue. Stock market making new all-time highs again this week. Remains fairly solid, and the dollar index, for what it's worth, continues to chop, give or take, something above 80. If you have any questions in regards to spreads, basis, or movement, feel free to give us a call if you want to chat about the markets. Phone number here in Cedar Rapids is 800-373-2525 or BIScommodities.com. With that, have a great weekend, and we'll see you next week.